Hi, welcome to Market Alert for Tuesday the 1st of August 2017, and starting off with the pound, you can see that we just had the one potential signal yesterday. The market sideways throughout the whole of the session, and then in the afternoon the market moving higher, and this can only mean one thing, and that is that the US dollar moved lower. So let's have a look at the weekly chart of the US dollar. We've looked at this before. You can see that all the way through 2014 the dollar strengthened, and then as we move back over to the left there so you can see everything, we can see that we've got the dollar sideways. We had a bit of a breakout up here, but then the market really has just done the usual thing of trading up to the resistance there, Fibonacci retracement, down, Fibonacci retracement, and then just moved lower. And what's interesting is this area down here where we've got these areas of support. Watch these being taken out. These are major, because if these are taken out, then you can see how far down we can actually go. Let me just use this over here. This is the sort of drop that you can expect, and when you look at the backdrop of everything at the moment in the US and the insanity in the stock market, which we'll come to in a minute, there's nothing to stop this market. The problems with Trump is firing everybody at the moment. Don't be surprised if we don't see a total fallout of the Dow. There are certain areas that you will find heading down, but watch out if this goes, because the level that you want to see is down here at 78.93 for any sort of support in the US dollar index. In the Dow, well, very interesting picture again, usual thing. Didn't need to send a note because you've already seen this for the whole of last week. The market moving higher in the pre-market session, trading up strongly there to the 21,800 level. The market then opened and we had a buy signal, and as I've warned, and I'll continue to warn, they want the market up, and this is what we've seen all of last week, moving the market higher. All the sell signals have failed because they want to move the market higher. When I say failed, they've either been filled and then the market's traded sideways, or they've been filled, got to the scalp, and then the market's turned around. What I mean is there's been no continuation in the downside direction. So yesterday, if you were a buyer of this first signal, and again I've warned in Sunday's recording that they'll want the market up at that 22,000. As soon as this puts in an appearance, you've got to treat it with caution, and we see the market then move lower from this signal. Doesn't quite trade down to the scalp, gets very close. That's your first warning that it isn't going to go down as the market comes back, trades sideways, then we get another buy signal, and then we see the market moving higher. So worst case scenario on this one is you get out at break even. On this one you would have lost 7 points had you traded it, had you not taken the short, because of what I've warned about, the market going up to 22,000, and you can go back and check that in the market alert. Then the short side over the last couple of days is not going to be that good. And just look at this, they've been moving the market on the overnight. There's no news until Friday, not anything major, when we get the non-farm payroll figures, and the market continues to move higher because nobody is selling into it. Traders are away on holes. They want the market up, they want the 22,000. Even Trump was yesterday saying how fantastic the stock market is since he came in, and this is the same politician when he was running for office saying that it's in a massive bubble and it needs to burst. So you can just see how these people soon change their opinions once they get in the driving seat. So you can see also the volume on the overnight, 2 o'clock in the morning, moving the market higher. Set all the algorithms up to move the market to that major level, which is this one here, this 22,000 level. You can see the market came close a couple of times and hasn't done it since, but it will do today, and if it doesn't, then I'll be very surprised. Now the question is, what happens when it hits 22,000? Well, that is the $50,000 question, isn't it? What does happen when it hits the 22,000? level will it hold above? Well, certainly going forward, the traders are starting to think that something is wrong, and I'll come to that in just a second. Here we've got the daily chart. You can see that we're very close to the 22,000. It's just been up, 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 up. This market has got to have a break, and if it doesn't have a break, then the fallout from this market is going to be major. The longer this goes on, the bigger the correction is going to be. There is no doubts about that whatsoever. News-wise today, it's Tuesday. The markets absorbed the weekend news yesterday. Tuesday's generally quiet, but we've seen that the markets moved higher on the overnight already, trying to get the Dow up to the 22,000 level. This afternoon we've got at 3 p.m. if we get the move this morning, I would imagine that the 22,000 will be hit after 8 o'clock this morning. When the European markets open, they're going to keep pushing these markets higher. Other than that, 3 o'clock is the only high impact news item you've got, which is the manufacturing figures. They're forecast to be down slightly. You could see profit taking at the 22,000 level. Be warned that we get any buy signals just above it, the market may not hold, and you'll see some profit taking in the short term there because of that major psychological level. That's how it works. This is designed to bring in a lot of people who think the market's going to continue higher, and then they just drop it on them. And in the implied volatility, a very interesting picture here. Now, with yesterday's new all-time high, you would expect the implied volatility to have actually moved lower. It didn't. It went from 723 to 757, and yet the market moved higher. So something isn't right here at all. This is a sign that the traders, this should be going this way, should be coming back down to this level with the market making these highs. Here is your first indication that the option sellers are quite concerned about what is going on at the moment, and they're starting to mark up the implied volatility on the options there, just to make them a bit more expensive, to cover the risk of them actually selling any put options at the moment, just in case the market does all of a sudden put in a big correction. And it's likely to at some point. It's going to take everybody by surprise. That's a certain fact. This isn't going to be as steady as she goes, I don't think, anymore. It'll be a case of something will come out of the blue and it will move sharply to the downside. And the implied volatility levels actually show this, both being so low that it has the characteristics of a market that will just catch everybody by surprise when it does correct or crash. But again, I don't see that major event happening until the autumn, but who knows? It's again, it's one of those that is going to be a bit of a surprise there. Okay, so that'll do it for this one. And if there's anything to report, I will let you know. I won't be here this evening. Got to attend a wedding reception, so I won't be at my post from 6 p.m. But again, let's see what the market does after 8 o'clock this morning. I would imagine that we're going to see the 22,000 hit in the pre-market session. Then it could be very sideways in the main session from 2:30, because that's the way it's become in the last week of trading. Okay, that'll do it for this one. As ever, thanks for watching. See you in the next one.